Testing 1, 2, and 3. Welcome to StockMarketFunding.com. Dow Jones and the jobless recovery. Well, how about this? How about this big artificial move up here on this weekly chart on the Dow? And you can see here where we slipped down to this lower trend line, and we put that right up there. And we were talking about this double top up here. And the reason why I'm showing it from a distance so you can see it clearly. And earlier in the week, if you'd like to go back on StockMarketFunding.com, find the chart that talked about the Dow and talk about this little pink line right here, which is the 50-week simple moving average. And this market's in trouble. We told people up here at this double top right here, that's this area right there. We said that on the way up, if you go back and look at the Dow history or S&P charts or things of that nature, is that we were going to come down. And we would come down hard. And investors were given a warning to sell in the up move. StockMarketFunding.com, SMF, that's all they kept saying in a lot of their videos. They're live, and it was designed to help you. And even as we said then, are you going to listen? Maybe you do, maybe you don't. And the ones that were fortunate enough to click on the link somehow by accident got given some very, very good information for free. Something to help you. And the thing about it is that these markets are in breach right now, and the jobless data, well, we already knew that everything was cooked. The books were cooked again, but in a different way off the bottom with stimuluses. And, you know, has anything ever really changed yet? No. There's still a lot of debt, but it doesn't matter. Here at SMF, we trade the upside when it's there. We trade the downside when it's there. So we profit in all of these directions. However, the people who do not have the skill or the risk management skills and training, then my view is stay out of the market. Don't rely on mutual fund managers and traditional old Wall Street anymore. That hasn't gotten you anywhere. And it hasn't gotten not just you, but many people anywhere, really. You need the right education. This is what it's all about. And having a system that works, and that if you don't have those tools, then hey, sit on the sideline or come and visit us for 5 days and start going from there. You can do that. It won't hurt you. You might find a lot of truth. A lot of people do come across our StockMarketFunding.com videos. Remember, our focus is on you directly, because that's why we do what we do, and we give these things away. We're not charging you for this, but we're not leading you the wrong way either. And what I'm saying here is that that blue line, the 10-week is rolling over. The 50-week is being breached. Go look at yesterday's videos on the Dow. Go fetch those. You're also swinging down 358, 75. That's a haircut. 34. You know, you break that 1020 on the S&P. Sorry, it's gone. It's gone. And you start breaking down on this Dow, like I said in earlier videos, if you have to go fetch those videos, a couple, 2-3 weeks ago, if you go fetch those under indexes there, you'll find out. So that way you can put them together and you can learn. And you can learn that next time something like this happens in the market, you're going to listen and you're going to protect yourself. This is a big 1-2 capitulation week, 1, 2, 3, 4 down, sliding through the 50-week moving average. What we talked about was our mathematical system, and we do have a platform. You can search for it. It's a direct access trading platform, or type it in, StockMarketFunding.com, direct access trading platform. This weekly chart right here is in serious trouble. This is where that bottom started. All the shorts were coming out of the market once again. go watch our Dow 10-year history video. It talks about all of these things that happen within economies, emerging markets, U.S. markets, and many other different things that go involved, but there are quite a few. And basically, the move is a directional movement that was never going to have sustainability. That's why we were calling for the 52-week high up here. We also, in our last year 2009 report, in November and December, we said that we make the 52-week high on or before January 1. Then that's it. And we won't see it again. And right now, we're in that high reversal that we talked about right there. So let's zoom in just on this piece of it right here. That was the capitulation day. It all happened in about 10 minutes. I don't need to go into that. What I do need to let you know is the 10-week is going down. The 20 is getting weaker. The 50 is being breached. Stop market orders can spin that bid lower. Okay? Panic selling. Oh, I better get out. That fear of 2008 coming back into the marketplace. Or did people forget what 2008? Most people forgot that this ever happened right here. However, they're right back in the same little bubble with the amount of stimuluses that they put into this economy and all of this other stuff that they've done since they've been trying to manipulate this financial system, not just in the U.S., everywhere. Everyone is guilty. And the thing about all of these other little small countries out here that are suffering financially, that cannot pay their debt, is remember that the U.S. does sell goods to these other small countries. And so basically, if that revenue goes down because those people over there are destitute, that means that growth in the U.S. could be very slow for a long time. But we already told that to people 2 years ago. That's nothing new. Here, let's keep talking about this chart. And let me tell you another thing. Because we care about you, this was a great pendulum swing. That was the 08. Okay? This market's not sustainable here. And there's a big floor below it. Even breaking a low. It could. You don't know what's going to happen out here. And the thing about it is, these financial crises around the world could trigger another domino effect. It's certainly possible. Because that's the way the human element reacts. Okay? But what you need to know is that 50-week is about to be breached. Right there. This is that line. And you got a long ways down to support here. All the way over back over here to this handles right above 8,000. Don't think it can't drop down there over the next several months going into year end. However, there'll be pit stops along the way. But as I said, the SMF bear qualifier, which means the trend, doesn't mean that it's long-term bear or short-term bear. It means that now it is and has been. We warned people of what the SMF bear and bull qualifier market analysis and or trends were about. And they show you right here. We told people that we were topping out. All the money was getting lighter. They were all in up here. And they were going to, you know, we weren't expecting the capitulation. That part I can be honest. But that we would still go from here to here. And the thing about it is, look at this slide, look at these rollovers here, look at that shrinking what MACD there. Some of the things that, you know, they're just general guidance on those, as where the weakness of the market truly is. They don't really have an opinion. They don't have a comment even, other than SMF designed its own proprietary trend tools and trend management as far as teaching you everything that you need to know. And we are launching our own platform, by the way. And earlier today, we just tried to put out a couple of things on